The central bank is the highest financial institution in a country which carries out the monetary policy of the government. It is the sole authority in the banking industry which acts as bankers to the government and the commercial banks. It will interest you to know that the central bank controls and regulates the supply of money and the activities of the commercial banks. Now, most countries have their own central banks, which work closely with the government in order to have means of influencing the credit policy of commercial banks. The functions of the central bank include managing interest rates, setting reserve requirements, and lending to the banking sector. The central bank also controls the supply of money in the country and help to manage foreign reserves. For example, during the period of inflation, the central bank sells government securities in the open market to expand or restrict the volume of money in circulation. And if the country is experiencing deflation, the central bank buys back these government securities in the form of bond. This is intended to control credit and is often used during the period of inflation to reduce cash with banks. Mortgaged banks. A mortgage bank is a financial institution that specializes in granting loans to individuals and corporate bodies for building purposes. Note that such loans are repaid by installments and can be spread over several years. Mortgage banks accept deposits from the investing public at a rate of interest and use the fund to lend at a higher rate of interest to people who wish to purchase their own houses. The functions of mortgage banks include the acceptance of deposits from customers in order to encourage savings towards owning a house. Mortgage banks also provide long-term loans to people or to estate developers to build houses. They also give advice on housing matters. That is, they advise and assist the government on housing matters. Another function of the mortgage banks include the provision of houses. Mortgage banks are also involved in the construction of houses and offer them for sales to the people. Then we have merchant banks. Just like mortgage bank, merchant banks are financial institutions which perform specialized functions such as management of debts and equity offerings. Here, merchant banks act as units of trust management to their customers. They also help to provide corporate management services. Number 2, promotional activities. Merchant banks helps to eliminate misuse of funds and business failure by rendering useful financial advice to their customers and even non-customers alike. This leads to increase in output of goods and services. Number 3, the placement and distribution. Merchant banks helps to foster international trade by granting loans to importers for purchase of goods from foreign countries. Next is corporate advisory services. They act as company advisors by way of telling them the possible areas to invest their money that can yield dividends in return. Finally, they offer project advisory services. Merchant banks manage takeover and merger bids of companies. Development banks. These are specialized financial institutions which provide long-term credits or loans to other enterprises for capital projects. Development banks provide loans for projects in the area of agriculture, commerce, and industry. In Nigeria, the examples of development banks include Nigeria Industrial Development Bank, that is the NIDB, Nigeria Bank for Commerce and Industry, the NBCI, and Nigerian Agricultural and Cooperative Bank, the NACB. Features of development bank include the provision of developmental finance for projects. Secondly, the development banks also help to provide medium and long-term finances to businessmen. Development banks also help in the balanced development of various projects. Also, the development banks act as the multi-purpose banks. The development bank assists businessmen and women in the area of finance. And you should note here that it is not only to the private sector, but also to the public sectors. The development banks accept deposits from the public and also encourage investments. Finally, the development bank helps in the infrastructural development of the states. Now, looking at the functions of the development banks. One, it helps to promote and develop small scale industries. Two, development banks helps to develop the large scale industries in the country. Still on the functions of the development bank, the bank helps in agriculture and the development of rural areas. The development bank helps to promote economic activities in the country. They undertake research to determine viable areas to develop industries. They also help in the supervision of developmental projects. They help industrialists and other investors to supervise development projects in order to ensure their successes. We will look at the functions of an insurance company as a non-banking institution. But first, let's define an insurance company. This is a financial institution that specializes in insuring, bearing, or accepting risks that abound in life, like theft, misfortune, incidental death, fire mishap, marine hazard, etc. Now, the function of an insurance company. One, it helps to eliminate the uncertainty of an unexpected and sudden financial loss. It will interest you to know that this is one of the biggest worries of a businessman. So the insurance company helps protect businesses against such loss. Two, protection. The insurance company provides a protection against such loss that a company may suffer. So at least the organization does not suffer financial losses in their day-to-day functions. Thirdly, the pooling of risk. In insurance, all the policy holders pool their risks together. They all pay their premiums, and if one of them suffers financial losses, then the pay comes from their funds. In summary, I began this lesson by defining Central Bank, stating its functions, and as well as the functions of other specialized banks. Ensure you attempt all quizzes and assignments in this module. See you in my next class.